Hello, everybody. It's Ty Crandall here, weekly coaching webinar. Today, we're going to be diving in. I'm going to be talking about the SBA funding that's currently available. We're going to talk about the CARES Act that was just signed off into bill last Friday, and this is not even available yet as of now. This is going to be offered through banks. There's going to be a lot of things happening, but we're going to talk about really two different things today. We're going to talk about what came out of this, which is called the Paycheck Protection Program, or the PPP, how it works, who's going to be able to get approved, all those specifics. And then I'm also going to talk to you about the current program that's out right now, the EIDL, the Economic Injury Disaster Loan. We will have a PowerPoint, as you can see here. This is what a raw PowerPoint looks like on our end before graphics gets to it and makes it do what they're going to do. So I'm giving you something that we don't even have ready for release. Once we do have it ready for release, it'll go back in your back office for you to be able to share with your network as well. So you'll be able to get the same education out to your audience. But I want to go through, answer any questions that you have. I want to talk to you about how this applies to you and your customers. I want to go through the kind of funding that's available now. I'm not going to use the actual PowerPoint slide. I'm just going to come through here and leave it like it is, where you can see the little slides on the left, and then you can see the main act. So let's take a look here. So the CARES Act was the $2 trillion stimulus that we just saw that was actually released as of yesterday or Friday. This is where we are with this right now. This bill was just signed off by the president on Friday. Then what happens is SBA now needs to set the guidelines. Once SBA sets guidelines, they pass it to lenders, they pass it to everybody that these loans will be going through. And so everything I'm going to show you, we don't know yet. I'm giving you what I know from the bill. This is not necessarily what's really going to happen. There's the government passes the bill, then the bill has to go to SBA, and then SBA has to determine what's reasonable and not, what can actually happen and what can't. And then they create what people like me in financial services love, which is guidelines. And then these guidelines are what we're actually able to adhere to. So everything I'm going to give you today, this is raw, except for the EIDL, which I'll talk about. The emergency disaster loans, those are available. But what we're seeing here in CARES Act is still up in the air of when or how this gets released. So the CARES Act, as you know, was basically the bill that comes down to stating, here's all the relief that's available, this $2 trillion. I'm not going to jump into airlines today. I'm not going to jump into hotels. I'm not going to jump into big businesses and enterprise companies. I'm just going to talk about, for the sake of 500 employees and less, what really is going on. So quick overview. We know about tax rebates. I'm not going to jump into a lot of that as well. $1,200 per individual, $500 per qualifying child. If you make under $75,000, you can get to $1,200. The $1,200 diminishes up until you get to $99,000, and then at $99,000, you don't qualify for the actual checks that are being written directly. But again, not a lot I'm going to say there. That just kind of has to do with personal funding. I'm going to jump more into the actual financing as related to this PPP. So these Paycheck Protection Program, which is the SBA funding that's going to come out of this bill for small businesses, this is going to be offered by lenders that are delegated authorities of SBA. Now, here's what's interesting. In the past, what's happened is the big banks are typically the ones with the authority to issue SBA loans. Chase, Bank of America, et cetera, et cetera. And somebody said they can't hear. If you don't mind, and sometimes that's an audio issue on your end. If you don't mind, if you can hear me right now, just say yes, I can hear you, or just say yes. Anybody say yes and let me know. Okay, so it looks like everybody can hear. Okay, so Cynthia, that might be an issue on your end, going out, coming back in, checking your speakers. Those may be something that can work. Thank you, everybody, for typing in yes. So PPP, Paycheck Protection Program, comes from the CARES Act. This is going to be what is going to apply to us, those in the small business world, 500 employees and less. Now, this will also be issued by lenders with delegated authority by SBA. Those have always been the big banks, Chase, Bank of America, Wells Fargo. What's interesting about this is it's rumored that they are going to allow fintech into this, which we've never seen before, meaning they're going to go to alternative lenders for the first time, like potentially On Deck, like potentially Cabbage, and they're going to let these kind of alternative lenders have the ability to originate these loans as well. Again, this is gray area, guys. I'm telling you what word is on the street. We don't know yet until it gets passed down from SBA, but you can imagine the big banks are going to be overwhelmed if they're handling all these applications. Okay, so it's a really big deal that potentially fintech or alternative lenders could have the ability to offer these. It makes it easier to get them to the people that actually need them, okay? But these are not coming directly from SBA. This is also a very interesting differentiation between the emergency relief funds that was that first $50 billion that was put into SBA. That money's coming directly from the Treasury. It's not coming from SBA and it's not coming from banks. Again, the first time we've ever seen that. When we get to that program, we'll talk about it. But already you can see a difference between the EIDL, which is the disaster relief loans, the $50 billion that first came out, and these PPP loans. The PPP loans are coming from regular channels that originate SBA loans. The EIDL is coming from the Treasury. So that's what we know about who's going to be issuing them. Okay, how are banks going to evaluate eligibility? Well, you got to be in operation before February 15th of 2020, and you had to have employees for whom the borrower paid salaries and payroll taxes or paid independent contractors as reported on a 1099. Okay, so that being said, that means if you have employees and you were in business after February 15th, then you can qualify. An employee can also be classified as a self-employed 1099 contractor. So a lot of questions that are already being asked here. Those are the people that are able to qualify initially. The application period is February 15th to June 30th. You have through June 30th to actually apply for this financing. Even though you can't apply yet because guidelines haven't been set, that is your deadline. You cannot apply after the June 30th as of the actual bill. Now, who can qualify? Any small business, nonprofit, veterans organization, sole proprietor, or independent contractor, eligible self-employed individuals, or tribal small business concern is eligible for loan if they employ no more than 500 employees. A very important distinction here. We need to look through this. We are seeing small businesses can get approved. We are seeing nonprofits can get approved. We are seeing veterans organizations. We are seeing sole proprietors and independent contractors. We are seeing self-employed individuals. This is very important languaging here because this is not the way it is with normal SBA loans. So with these SBA PPP loans, nonprofits can get them, sole proprietors can get them, independent contractors can get them, eligible self-employed eligible employees can get them. What they're ultimately looking for is they're looking for 500 employees or less. Now they say here, if applicable, the SBA size standard for employees in the industry where this doesn't even matter. What they're saying is that unless you have employees that are well beyond your NAICS code, so they're even allowing a little blurb in here about, if you're in an industry where your NAICS code, the employees you have is way above or below what's normal for that industry, it creates an issue. Let's just say that that's less than 0.5% of any case that exists. So we're going to ignore this because this is something we're really not going to see. What we really need to care about is you have 500 of employees or less. That is what is deemed as a small business when it comes to the government, when it comes to SBA. So employees include anybody employed on full-time, part-time basis. Okay, and for businesses with more than one physical location, then they look at 500 employees per location. Again, most of this really doesn't matter. All we care about is that anybody that's 1099 self-employed, you can get approved, even nonprofits, if you have 500 employees or less. It's basically what they're saying for the most part. Now, here's where it gets important. The maximum loan amount is going to be 2.5 times the average total monthly payments by applicant for payroll cost incurred during 1 year before when the loan is made. They will take 1 year before your loan. Let's say you get your loan March 1st. They are going to look from March 1st, 2019 to March 1st, 2020. They are going to have you average your payroll over those months. What is the average amount monthly that you paid for payroll? They are going to give you a loan as much as 2.5 times that averaged amount. So let's say hypothetically that you look at your payroll average is $100,000 a month. If we look at the last 12 months, I'm just of course creating really simple, easy numbers for us to use. You get 2.5 times that, which means your max loan amount could be $250,000. I had a client on the phone the other day. His monthly payroll is $500,000. and $500,000 times the 2.5% is what he is allowed to get, right? Which is, you know, as you can imagine, that is what $1.5 million that he's actually able to get through this. Well, like, you know, $1.2 million. So you're able to get about 2.5 times the amount of your average payroll. I don't know if I actually did that math. Anyways, 2.5 times the amount of your average payroll. On $100,000 monthly payroll, you are looking at about $250,000 is what you're looking at. Plus outstanding amounts of any emergency injury disaster loan, the EIDL, that you got after this. So what they're saying here is this, very important, you need to know this. They don't want you to have both. You can't have the EIDL, you can't have the PPP. A lot of people are submitting applications for EIDL right now. It's not my advice. My advice is to kick back and wait to apply for this. Remember, this EIDL was what the first 50 billion, when they tried to act quickly, they rolled out the 50 billion. That's this emergency injury disaster loan, okay? That's this EIDL. But again, that loan is going to get rolled into this loan. So they're saying it's the max of this plus whatever you already borrowed with the EIDL with a max of $10 million. That's what's going to happen. So bottom line is they're going to want to put that into one loan. They're not going to want you to have the EIDL and have this. So if you have already applied, or if you haven't already applied for EIDL, my advice is not even to apply or have your customers apply. This PPP program is going to take the place of that anyways. So it's basically the loan amount's 2.5 times your payroll plus whatever you owe on that EIDL. Okay, and there are special rules for seasonal employers and businesses not in existence. I have not seen these special rules anywhere. We have not seen what these special rules are, so I don't know what those are as of yet. Payroll costs include the sum of payments of any compensation for employees. You're going to need this as we search further into this bill. Salary, wages, commissions, similar compensation, payment of cash, tip or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment for the provisions of group health care benefits, including insurance premiums, payment of any retirement benefits, payment of state or local tax assessed on compensation of employees. The sum of such payments cannot be more than $100,000 in 1 year, okay, as prorated for February 5th, 2020. So this gives you an idea of how they are titling or how they are defining compensation for employees. Now, compensation of an individual employee in excess of an annual salary of $100,000 prorated for this is not to be included. So this is still a gray area, but what it sounds like is let's say you pay yourself, let's say you have a manager that makes $150,000 a year. The way this bill looks, they are going to include your 100 from that guy, but exclude your 50. So they're going to exclude anything above $100,000 when you're figuring out the salaries of your team. But I don't know, it's gray area, but it looks like they will include the 100,000 of that 150,000 salary, just not anything above the 100,000 they're actually going to accept. Okay, taxes imposed or withheld under FICO, they're not going to include those. Any compensation of an employee outside the United States, I'm going to not even really talk about this one. Qualified sick leave or family leave wages where a credit is allowed under the Families First Coronavirus Response Act. Look, again, less than 5% of the cases. Let's focus on the things that are going to appeal to you, most of you, and most of your actual customers as well. So any compensation, okay, of employees outside the U.S. is excluded. FICA taxes is excluded. Salaries above 100 grand. The whole salary I don't think is excluded. The salary above 100 grand is going to be excluded. Okay, loans can be used for these things: payroll costs related to the continuation of group health care benefits during periods of paid sick leave, medical, family leave, insurance premiums, employees' salaries, commission, or similar compensations, payments of interest on mortgage obligations, rent, utilities, interest on any other debt obligation that was incurred before the period. This is basically what will be forgivable, as you will learn. So the loans can be used for payroll. They can be used for insurance. They can be used for payments of interest on mortgages. They can be used for rent. Okay, they can be used for utilities, and they can be used on interest on any other debt that you have. Okay, so that means from the way this thing is worded right now, you could even take, I talked to a client earlier today that has an on-deck loan. You could take the on-deck loan and you could actually use the interest, and the loan could be used to pay that off. and you could actually be able to write off the interest on that debt obligation. So they're not allowing you to write off the whole obligation, okay, but they are, per the bill, allowing you to write the interest on the debt obligation that was incurred before the period. So even before the loan period you got, even before this February 15th mark, they are allowing you to come in and exclude that. Okay, so an eligible recipient applying for a covered loan must make a good faith certification that the uncertainty of current economic conditions makes necessary the loan. So you got to say that, look, I need the loan. You got to acknowledge that the funds are going to be used to retain workers and maintain payroll, or make mortgage payments, lease payments, utility payments. Basically, you're making an acknowledgement that you're using the money to be able to run your current operation and to pay your payroll, and that the eligible recipient does not have an application pending for a loan under this subsection for the same purpose, and from February 15th to December 30th, that the eligible recipient has not received duplicate amounts for the same purpose. So they've got two provisions here that say the same thing. You haven't already got another loan, that you're not applying for the same loan twice. Okay, but outside of the fact that you're not applying for the same loan twice, they're basically just saying that you're going to acknowledge that you've been adversely affected and that you're using the money to basically make sure that your business can survive and to retain your existing payroll, is what it is actually the language is reading. These are non-recourse loans and no personal guarantee. Yes, you heard me correctly. You know I'm a no PG kind of guy. So these are no personal guarantee. No personal guarantee is required to cover the loan, and no collateral is required as well. Very, very interesting changes. SBA loans require collateral. These loans don't require collateral. SBA loans require guarantees. These loans don't require guarantees. There's also no fee will be collected from the February 15th to the June 30th. So if you're applying through their expiration date, they are going to waive SBA fees on this loan and this financing as well. Well, deferral of payment from February to June, there is complete payment deferred relief for impacted borrowers with a loan with terms of 6 months to 1 year. So it looks like you are going to be able to defer the payment and the interest for as much as 6 to 12 months. Again, we're waiting for the actual SBA guidelines, but that's the language in the bill. An impacted borrower is one that's in operation before that date. February 15th is your mark. If you created a business after that, well, that was an interesting time to create a business. Probably didn't know about coronavirus, but now obviously you probably realize how interesting of a time it was. But if you did start your business before February 15th, then you can defer the first payment on the loan for 6 to 12 months. You don't have to pay that first payment for 6 to 12 months per the actual bill itself. Let's talk about loan forgiveness. What is covered for the sum paid? Okay, so for 8 weeks from origination date is how it's worded. So you are basically able to get loan for forgiveness, okay, basically in the sum paid for 8 weeks from the loan origination date, for 8 weeks total time. That would include payroll cost, interest that you're paying on any debt obligation, indebtedness or debt instrument incurred in the ordinary course of business before that time. Okay, so you're able to come in here and actually be able to get the payments on existing loans you got before this all went down deferred as well, or forgiven as well during this 8-week period. Any payment of rent made under a leasing agreement before 2/15, any utility payment before not before 2/15. Rent and utilities mean that your original utility, your original rent, your original mortgage was obtained before this. If you obtained it before this date, then those payments can be forgiven. So those payments can be forgiven on this PPP loan. Okay, loan forgiveness documents. They're going to have you do verification of the number of full-time employees on payroll or number of employees on payroll and pay rates, including payroll taxes, reported to the IRS and state income, payroll, and unemployment insurance filings. Canceled checks, payment receipts, transcriptions, verifying payments on mortgages, leases, utilities. Basically, if you're going to claim that these parts of the loan are dedicated for these purposes and should be forgiven, you're going to need to prove it. And the proof comes in the form of either coming in with your payroll and your payroll rates, including the payroll tax filings that you've had, and basically whatever you're going to use to verify your utility payments, your lease payments, your mortgage payments, which are basically going to be canceled checks or receipts, whatever it may be. They're going to ask you to verify those things. certification from an authorized representative of the eligible recipient that the documentation presented is true and correct, that the amount for which forgiveness is requested was used to retain employees, make interest payments on a covered mortgage, for the purpose basically you're supposed to use it for, and any other documentation the SBA terms is eligible. No eligible recipient shall receive forgiveness without submitting documentation required. So I'm giving everybody a heads up. Here's what you need. You can't apply yet, but get to work, get this stuff, get anything. Here's what can be forgiven. Here's what you're going to need to verify from what you're going to try to get forgiven. So you should get to work right now and getting together these things, any canceled check on utility, mortgage, lease, insurance, etc., and everything to do to verify your payroll and verify your payroll rates and verify payroll tax filings. You're going to want to go ahead and get that stuff together. And then at some point, you're going to have a certification from somebody, we don't know yet, that's going to then you're going to have to sign off on that says that you're using it to basically retain employees, okay, and that the documentation you're presenting is true and accurate. This is very common with SBA loans with the representation it's true and accurate. This is obviously new with SBA loans because of the purpose of the actual loan. Loan forgiveness time frame. They are giving us 60 days. They are saying that within 60 days of applying for loan forgiveness, you will get your decision in 60 days or less, okay, and any amount which would be included in gross income of the eligible recipient by reason of forgiveness is excluded from gross income, okay? So any amount that is excluded is not going to be considered to be gross income. Okay, a reduction can happen if there's a reduction in full-time employees. That's what FTEs are when comparing to the average number of FTEs per month from the recipient. So basically what they're saying is this, and I've read the bill that says it's 90%. We will see how it pans out. You have to retain 90% of your employees. If you let part of your employees drop below the 90% retention, then they are going to then reduce the amount of loan to be forgiven. You need to understand that there's two different bills. There's two different kind of funding here for two different purposes. The first was the $50 billion that was put in. That's the EIDL. You can see I'm one slide away from teaching you that. Okay, that loan was designed to help you get past the fact that your sales are dropping, your expenses are increasing, your revenue is dropping. Okay, this loan is specifically designed for retention of employees. So the EIDL, you've got to prove that you had a hardship. You got to prove that like your business was shaken up, that your revenues dropped. For example, your expenses have increased, that you've got a real hardship. With a PPP loan, you've got to prove, you got to verify that you are not letting employees go. The whole purpose of this loan is to retain employees. They don't want you to lay people off. So they're giving you all kinds of concessions for that. But your concessions are going to be reduced if they find out that you are laying people off. So one thing that what I've seen in the bill is that that's 90%. So you've got to maintain 90% of your employment. But I don't know. Again, there's some gray area. I've read that 90% goes back to February 15th. And I've seen that the 90% is from the time that you actually get the loan through the end of the year. So we don't know yet. This is why I'm saying it's a gray area until SBA sets the guidelines. But what I do know is that what I have read is that it is 90% retention of employees. The question still becomes, does it go back as far as February 15th, 2020, or is it the time you get the loan? Those are still things that we're waiting to see. Reductions also happen for over 25% in certain reductions in total salary or wages of any employees. These are employees who in 2019 did not receive a wage or salary at an annualized rate more than $100,000. There are special rules for tipped workers. I have not seen these rules as of yet. So what they're saying is hey, it's not just that you have to retain employees, you kind of got to need to pay them the same. Like you can't come in and say, hey, I retained 90% of my employees. I just moved them all from full to part-time. That's what they're basically saying here. Is you're going to have to retain employees. You really can't come in and dramatically cut their pay or dramatically cut their hours to still be able to get this loan forgiven as well. So it gives you a pretty good idea of the PPP loan. If you have questions, go ahead and type them in. Some questions that are probably going to be asked is, what's the term of this loan? How long is it? We don't know yet. I haven't seen anything about that. I have seen in the bill that they're proposing interest rates stay less than 4%, but I have seen nothing regarding how long the loan term is. Is it going to be, 3 years, 5 years, 10 years, 20 years, 30 years, like normal SBA loans can go as long as 30 years? We don't know that. I saw nothing in the bill about that. but it did mention that interest rates are supposed to stay less than 4%. So any other questions on PPP, go ahead and type them in, but that is the current protection that is coming out. Now, I think we're going to get an EIDL, and I don't think we're going to get into the other, but I will tell you that beyond the PPP, there's also $17 billion that was earmarked for $10,000 grants for business owners as well. So these are grants. This is given money. These are not loans that have to be paid back. I have not been able to find anything about who to qualify and how to get these $10,000 grants as of yet. So I do not know that as of yet because I have not seen that language released. Now, Cynthia says how to apply. There is no way yet. So let's look at what happens here. Here's kind of a breakdown of how this is going to work, right? So we've got the bill was passed. This is where we are right now in this step. The bill was passed. The president signed off. The bill now has gone to SBA, and the SBA is the one that's now reviewing the bill, the requirements of the bill, and then SBA is going to determine the actual guidelines. Okay, they're going to determine the actual guidelines of how these loans are generated. Now, think of it like this. Every loan that a bank originates has guidelines. Here's the rules that somebody must meet to get approved. This bill, we don't know all that yet. SBA has to determine these guidelines. Then SBA has to then pass these guidelines to the lenders and determine who the lenders are. Because right now it's rumored that they're going to let fintech in. They're going to let alternative lenders in. They're going to go to more channels than what they typically do. So we don't even know if that's possible. We don't even know who's going to be issuing these loans yet. We know Bank of America, M&T Bank, Chase, etc., big players. We know they are, but we don't know if fintech's going to be here. So we don't know if fintech here is going to be issuing these or not. Yet we don't know who's going to issue these. There's also a rumor from what I saw. Well, I can't even say this for the bill. From what I saw in the bill, I see that it's possible that we might be bypassing SBA altogether. So that means for the first time ever, remember, I've always said SBA loans are a flipping nightmare to get because you have to qualify with the SBA. You have to qualify for the bank. Right now, from what I'm seeing in the bill, there's a real good possibility here that they might be able to bypass SBA. Once SBA determines these guidelines here, then what they're going to do is tell banks, and these banks can then use these guidelines and originate the loans and not even go through SBA. Again, not sure, but there's language in the bill that references just that happening, that this could bypass SBA and go from the bank, which could include fintech, all the way directly to the borrower. So hopefully that gives you a lot more information. But what I know now is people that are designated to offer SBA loans, which includes your big banks, your Bank of America, Chase, Wells Fargo, M&T Bank, and a lot of the small community banks issue SBA loans. We know they're going to be able to. There's a question whether fintech is going to be able to approve them. There's a question on whether these loans could bypass SBA and just be approved at the actual lending source. The bill even talks about getting money as fast as 36 hours. But then again, those are bureaucrats that know nothing about lending. So there's a lot of things here that we just don't know. So hopefully that answers that question. Okay, Raquel says, with rent and mortgage payments be for just business, rent, mortgage, and utilities, or can it be for your home? It is for business. This is for your business expenses, not for your actual personal expenses. Great question. What if client already applied but given no approval yet? Should they still apply for payroll loan? My advice is yes. If you already applied for EIDL, then what my advice to you in that case is that you just keep that application. If you applied for EIDL, then my thing is leave it like it is. Leave it as it is. Because I mean, I wouldn't withdraw it. Like if you already have your application in line, then I would leave it as it is. Just let that application sit there right now. Now, if you have a chance to apply for PPP and your PPP lender says to withdraw that app, then I would do what they say to do. But right now, there's so much gray area here. The last thing I would do is to withdraw this application. I would leave the application in until your PPP lender says to remove it. That would be my advice right now. Now, Katrina says, what about self-employed or sole prop that don't have payroll? Well, in that case, you're going to have a hard time because you don't have any payroll. In that case, you might want to go to EIDL. You might want to go to this EIDL because this whole thing, look at what this is. This is literally a payroll protection program. Okay, that's what it is designed, or excuse me, paycheck protection program. So I call it a payroll protection program, and I don't know why I do that, but I do it because it's really designed to retain your payroll, the whole bill. So if you don't have payroll, you're probably not going to be able to get a PPP. Again, guidelines aren't passed. I don't know. Maybe you could slip in. I don't know if it's going to happen. But my advice is not even to think about PPP if you don't have employees. You need to be focused on this EIDL instead. That would be my advice in that case. But again, we don't know yet, but that would be my case. And that would be my advice since you don't have any employees. If a small business only uses 1099 contractors, not employees, how would that work? Exactly the same. It's exactly the same as this. So 1099, self-employed are still treated as employees here. So you would do it exactly the same, whether you're 1099 or W-2. It doesn't make a difference. You can still get this, and you can still get the funding for that purpose. Now, again, I kind of go back here to Katrina's question because it's such a good one. Like, what if you don't have employees? What do we do here? I don't know. We don't know because, you know, you can still get utilities forgiven, right? You can still get rent. You can still get mortgage forgiven. Will they accept you if you have no payroll? The bill did not speak to that. So I can't give you an answer because we don't know. And I'm trying to kick that around in my own brain, which is why I came back to it, because you could still probably get your utilities, rent, and mortgage signed off, but without any employees, I don't know if I would go for this. I think I would go for the EIDL instead. We will know better when those guidelines actually come out. What did you, okay, so what did you say to do someone who has already applied for the EIDL? Keep your application in. That is what I would say. But, you know, worst case scenario, they tell you to withdraw it when the PPP application period comes in, but I would not pull your EIDL. We applied for EIDL and it's still there. Our application is still in line. We would never pull it out of line because then, you know, then you realize you shouldn't have, and then you lose your place in line. So I would still keep that. I would still keep that in there. Raquel says, I spoke with SBA today and they said they don't know how it's qualifying anyone and that the 10K is supposed to be in owners' accounts in 3 days. Why are they telling that kind of information if they don't fully know? Well, that's a good question. You know, I mean, look, I've been in financial services for 2 decades, and what I love are guidelines. And I would killed it as a mortgage broker because I understood guidelines better than underwriters. And when they would turn down a loan, I'd say, no, it fits your guidelines, and here it is. And then the underwriter would say, no, it doesn't. And I'd say, here's your guidelines. And I would teach them their own guidelines. And we were very good because we knew the guidelines better than the lenders knew the guidelines. In this case, with this $10,000 that's supposed to be in business accounts in 3 days, Raquel, your guess is as good as mine. I've seen nothing online about how to even go about getting this $10,000. So I don't think you're going to see any of that until SBA determines who can qualify in an actual formal approval process. But, you know, everybody's confused right now. Nobody knows because SBA doesn't know. So I don't think I can answer that because I don't think they can answer that question, let alone say that that money is going to be in somebody's accounts for 3 days. But keep in mind, I have read that the money can be distributed in as little as 36 hours in the bill, but none of that money can be distributed until SBA has the guidelines. Remember, the bill has been passed. The bill went to SBA. SBA is trying to determine the guidelines. Then they got to pass those guidelines to those that help you get the money. If there's no guidelines, there's no way anybody can originate a loan. It's just that simple. And Katrina says, I have short-term rental customers. Main expense is cleaners. Well, you see what's forgivable on the loan, and what's forgivable on the loan is not that, but it is the utilities, the rent, the mortgage, etc. Raquel says, what if you have a home office or are owners able to use money for mortgage and home utilities? I do not have an answer there. And here's why, Raquel, because there's nothing that speaks to that. I can only tell you what the bill says. I can't tell you what the bill doesn't say. I can tell you the bill does not reference what you are asking about. The bill does not reference if you have a home office, can you use your home mortgage or rent or home utilities? The bill doesn't state anything about that. So we will have to wait to get an answer. Very good question, but we do not know answers yet because the bill has not referenced that. So those will be things that SBA will have to determine. Do you need business credit? Regina, from what we know with PPP, you don't, because you're not going to have to meet normal SBA requirements. You will for EIDL. EIDL, as you're about to learn, you will. You do need business credit established. You need normal credit requirements for EIDL, but you do not meet normal requirements from what we understand from SBA. But again, SBA has not determined guidelines yet. They have not come in and even mentioned credit requirements yet. We do not know. But as of now, the bill has not referenced that you need to meet certain requirements or not. But we could see that SBA comes in and says, yes, you need to meet normal SBA credit requirements. That's what they did on EIDL. So when EIDL guidelines were passed, they came in and said, in order to qualify, you must meet SBA's normal credit requirements, which means you need to have consumer credit that qualifies. You need to have business credit established to qualify. Now, for those, and this is a great question, Regina, and Regina was on my live stream. We were just talking about this, I believe. But when it comes to EIDL, let me explain to you what I'm saying here. SBA uses a score called FICO SBSS, okay? So SBA loans use FICO SBSS. This is FICO's small business score. The minimum score to get an SBA loan is 140 score. Okay, this is what you have to get SBA. If you don't have a 140 score, you can't get a normal SBA loan. The problem here is that you can't get 140 without business credit. Okay, you just can't do it. The math doesn't work that way. FICO SBSS pulls your business credit scores first, and then it looks at your consumer credit scores. So in a world where you don't have business scores established here, when you don't have any business credit established, you cannot qualify with SBA. You can't qualify for a normal SBA loan, okay? So what happens is normally to get SBA, you have to have established business credit. If you have none, then your personal credit score, no matter how high it is, even if it's 850, it will not be high enough to get you a FICO SBSS of 140. So the problem here is that you actually come in, you've got to have business credit established to get a normal SBA loan because your FICO SBSS score won't be high enough if you don't. We know that EIDL, you absolutely do need normal credit requirements for SBA, which means you must build business credit. But since there are no guidelines for this yet, for the PPP, we just don't know. That's why we don't know the answer to that question yet, Regina. As of Sunday night, okay, it is in the application. Okay, on the SBA Gov website, it lets you ask for the 10K by check box on the EIDL app. Okay, so Todd just said in there that on the application right now for the actual for the EIDL on that application on disaster.gov, okay, or disaster.sba.gov, that it does say that $10,000 check. So Todd, if you guys don't mind, somebody else, I mean, Todd, I trust you completely, but hey, while we're doing this webinar, go verify that. Todd Porter just says, if you go to EIDL's application, you can actually apply for the 10,000. I have not seen that yet. And he says, as of Sunday night, I haven't seen that yet. So do me a favor, while we're on this webinar, guys, some of you go check the disaster.sba.gov and see if there's a check mark you can put there to get that $10,000. I'd love for us to be able to verify that. I can walk out of this with great information I did not have before I came in. Can you use a credit partner for EIDL? No, not that I know of. There's nothing in the guidelines that say that you can. Okay, and Sean gave us a great link I don't even know if I can't copy that, but let me see if I can copy that. Copy email. Okay, so it's COVID-19relief.sba.gov. Okay, and Cynthia says, I see the same thing. It asks for the bank routing on account. Okay, so great. So it looks like we've now figured out that as of Sunday, they now put a box you can go when you apply for EIDL to get the $10,000, and they're even asking for your bank account information there. And Cynthia says, I did check the box. It's a button on the last page. Okay, so thank you everybody for verifying that. Okay, there is a check bar for the 10,000. So now we have an answer on that 10,000 as of Sunday, and I appreciate you guys giving me that feedback. Okay, you also have to put your bank account in though. Will there be a recording of this? Yes, all webinars are recorded in your back office. Okay, so we are now good. We now know, we learned something new here from Todd. Todd came in. Thank you, Todd, for telling us that you can now apply for the EIDL, and there's now a checkbox as of Sunday night that you can now get the $10,000 and including your bank account information on there again. And the website, the best website that I found to be able to go to here is if you go to disaster.sba.gov. Okay, so if you go to disaster, oh, I thought that was. Let me see. What's it? Let me see. It's SBA.disaster.gov. Maybe I have that wrong. Okay. Oh, well, let me see. Where's the SBA disaster link? Let me see for that real quick here. I know. Okay, so it's disaster. Nope, that's not it. Okay, disasterloan.sba.gov. So disasterloan.sba.gov. So if you go right here to disasterloan.sba.gov, then you are able to get there. I will go ahead and put that into chat as well. I don't know if I can copy this. Okay, so I can't. And if I click on this, it takes me to some other crazy link. But it is, again, I'll put this link into chat. So you all have it. There's the actual link right there. Okay, so there's the link, and there's a bunch of them. Chris put it in here too. vid19relief.sba.gov. You just Google it. There's a million of them there. But there's this is the one that I found that takes you to the right place as well. Disasterloan.sba.gov. Disasterloan.sba.gov. Okay, so let's talk about EIDL. Okay, this is the first one that was passed. This is the $50 billion. This is the one that's currently available right now. Okay. And this offers money to small businesses, small agricultural cooperatives, small aquaculture businesses, and most private nonprofits. So bottom line, EIDL applies to nonprofits. It applies to small businesses under 500 employees. It is for people directly affected by the actual disaster. And by that, what they mean is you've seen decreased revenue, you've seen decreased sales, you've seen increased expenses. I've seen that state by state and the SBA, that I haven't seen the final amount of how much you must be affected, but I've seen 25% thrown around a lot. Bottom line is you have to show that your sales have diminished, that your expenses have increased, that you're basically having a hardship as a result of getting the loan. Okay, now applicants must have a credit history acceptable to SBA. That typically means good consumer credit, no drogs. In the last 2 years, no bankruptcies, no judgments. Again, I've seen 780 FICO score borrowers denied, but SBA really requires a 620 FICO score higher. As we've talked about, you need to have established business credit to get a FICO small business score high enough to do it. It's just the way that it is. You can't get SBA loans and meet their credit requirements unless you have business credit established. Okay, repayment. SBA must determine that the applicant, you can repay the loan. Okay, they got to make sure that you can pay the loan back. Eligibility. Applicant business must be physically located in a declared county and suffered working capital losses due to the disaster, not due to a downturn in the economy or other reasons. Okay, so that being said, you know, when you are in a declared county situation and you've got working capital losses due to the disaster. So for example, you're a bar, you're a restaurant, your sales are closed down because they're closing you down, then you are eligible to come in and be able to get approved. You can get approved for as much as $2 million. You can get approved for a rate as low as 3.75% for profit, 2.75% for nonprofit. Terms up to 30 years. Let me give you the math here. The math is that a $350,000 loan, okay, under this program for 30 years at 3.75% is $1,620 a month. I've always said before, to keep your loan amount under $350,000 to get the Express program, they raised the Express program to $1 million. So you can now get the faster loans through SBA Express up to $1 million instead of $350,000. Something else you should know. Eligibility is based on business size, type of business, and its financial resources. They've said before that you can't even apply if you have the ability to pay your debts through other kind of financing. They've now withdrawn that. So they've now withdrawn it, and they say you can apply for the EIDL even if you have other financial means to be able to pay your bills. So they've now withdrawn that and said that you actually can apply even if you have the other financial resources to pull yourself through. How can it be used? Pay fixed debts, payroll, accounts payable, other bills that could have been paid had the disaster not occurred. The loans are not intended to replace lost sales or profit or for expansion. Okay, the EIDL over $25,000 will require collateral. You got to have collateral. Now, they can take real estate. They specifically mention real estate as being a viable form of collateral. They're not going to turn down the loan if you don't have collateral, but they will make you pledge what's available. So if you own a home, for example, you're going to have to pledge that home as collateral. They're going to make you do it. But if you don't own a home, you rent a home and your business doesn't have any collateral, they can't deny the loan for the reason of not having acceptable collateral. And eligible entities, agricultural enterprises, religious and charitable organizations, gambling, casinos, racetracks, real estate developers primarily engaged in subdividing real estate, they are excluded. Now, there is a section of the bill that deals with funds for agriculture, for farmers. I don't know enough about that because, to be honest with you, I don't deal with enough of that. I don't have enough farmers ask me those questions. I guess being from Indiana, I should go back to my heritage and know that, but I don't. I'm not paying attention to the agricultural aspects of the bill, just the small business aspects. But these are ineligible entities per the EIDL. Okay, now funds come straight from the U.S. Treasury. They do not go through a bank. You can go to, there it is, disasterloan.sba.gov. So you go to disasterloan.sba.gov. There's no cost to apply. There's no obligation to take the loan if offered. Okay, and again, the maximum unsecured loan is $25,000. We understand that already. What that means is over $25,000 is secured, which means that they are going to ask you for collateral. And applicants can have an existing SBA disaster loan and still qualify for an EIDL for this disaster, but the loans cannot be consolidated. So they are also going ahead and they are waiving 6 months of payments if you have an already existing SBA loan. That is what just happened in our case. We have an SBA loan. We applied, we were already approved, and they already waived our next 6 months worth of payments on our SBA loan. Our SBA loan is $4,000. I talk about that loan all the time in the process to teach you guys what that's like to go through to get approved. That is waived. So we do not have to pay payments on 6 months for the existing SBA loan we got last year before any of this happened. So that was a fairly fast process for that to actually go down. Okay, disaster applicants may apply online, disasterloan.sba.gov. Okay, you can also go to sba.gov/disaster to get the paper application. And then you can take a quick screenshot of this. This is SBA's customer service. You might have a little bit of a wait there right now, a little bit, but you can still try, see what happens. It's like getting in touch of Uber right now or Uber Eats, but you can try. And you can also see their customer service email, the customer service phone, address, everything you need, but you don't really need any of this. All you need is disasterloan.sba.gov, okay? And then that's really, for the most part, what you need to know about that. There's SCORE and some other places that they're sending you to be able to get help. But again, none of that really is applicable. All you really need to know is go to disasterloan.sba.gov. That is the EIDL. The EIDL guidelines are already out. You can submit 1 year's financials without needing multiple years worth of financials to come in and be able to get approved. You have to meet normal credit requirements. You have to supply collateral if you have it above $25,000. And again, if you don't have collateral, they can't deny the loan. And these loans are specifically designed for hardships. You have to prove that the disaster adversely affected you by reducing your revenue, reducing your sales, increasing your expenses, and it's created that hardship. There's a lot of different ways to prove that, including just bank statements to show your sales declining, your financials that show sales declining, et cetera, et cetera. It's kind of interesting. And you know, it's interesting if you do your accounting based on a cash or accrual basis. So for ours to work, we had to switch from cash to accrual basis so they could actually see the drop off in March. So again, that's why it's helpful to have an accountant, because you've got to show that. But when we show the financials, you see January, you see February, you see a drop off in March, and then that therefore is our proof that we've actually experienced a hardship. They're going to ask you to prove that. So I'm going to open this up for questions on the EIDL. Okay, so again, Robin says, if our client does not have established business credit, which is SBA requirement, they will not qualify the EIDL. That is exactly what SBA is saying. What SBA's exact wording on this is that you must have a credit history acceptable to SBA. That is their exact requirements. If you dig in deeper on this and look on SBA's website, they will tell you that you need to resolve any blemishes on your personal and or business credit. So you cannot get an SBA loan without having business credit. Their exact wording is that you must have credit history acceptable to SBA, since you can't normally get an SBA loan without having good personal credit and established business credit. From their exact wording, it definitely appears that way. Now, again, if I'm offering business credit and talking about this, I'm telling everybody out there exactly what I just told you. But if I actually am going to apply for an EIDL and I don't have established business credit, I would still apply anyways. But according to them, if your credit history doesn't meet their typical standards, you're not going to get approved. SBA's typical standard, 140 FICO SPSS score. You can't get a 140 if you don't have established business credit. So what I'm telling people right now, apply for EIDL and start getting on your business credit. Because if you start today, you can have a business credit profile and score established in as little as 30 to 60 days. So while your application is going through, you could be building business credit at exactly the same time. So hopefully that answers your question. And we do not know of any of these. They have not said anything about credit partners being accepted for this. From everything I've seen, you're going to have to qualify. It's not a credit partner that's going to help you get approved. And Bob says, is there any assistance for brand new businesses? Well, for these two packages from SBA, the answer is no. If you're looking for general funding, sure. I mean, we still have the normal funding available, right? If you have credit, if you have good credit, you can get the credit line hybrid program. That's where you can get up to 150,000, 0% financing, no doc, and get, business credit building. They build business credit. You've got to have a 650 FICO or higher or a guarantor that does. There's lots of collateral that could be used as financing as well. So Bob, you're able to come in and you're able to get all kinds of collateral-based financing as well. If you have a 401k or stocks or equipment or inventory, you can get financing for any of those things as a startup. And of course, as a startup, you could build business credit as well. But the EIDL and the PPP, the two SBA loans, as you can clearly see, are for businesses that were established before February 15th and not after. These SBA loans are just not going to work for you. Okay, and Malaya says, according to the SBA website, the reference says that when you apply for the EIDL, you can then apply for the loan advance and the loan that will then not to be have to be repaid. Do you have any information on how that process works? No, I don't. You'd have to go through them with U.S. Treasury. I'm not even sure what you're referencing, because when we talk about the forgiveness of these payments, the forgiveness really comes down to the PPP loans, not the EIDL. But you are able to go through the process right through SBA's application page that you're on and apply to have past payments on SBA loans actually forgiven. So hopefully that answers your question. Are banks still approving credit line hybrid financing? Yes, they are. Who don't currently qualify for SBA, they sure are. And that credit line hybrid is where somebody can come in and get up 5 to 8 times the amount of their highest credit limit account, up to about $150,000, 0% rates for 6 to 18 months. Okay, no doc financing. You need a 650 FICO score or better from you or a guarantor. We are still seeing not much change there. Bank of America's tightened up a little bit, but our approvals are still the same because all other credit issuers are the same. And it looks like the commercial paper that's being bought on the back end of this should free up liquidity with Bank of America, but we are still seeing those approved. We are still seeing approvals just as high as we always have. Can an owner who is paid AS an employee include that salary along with other employees in amount consolidated in application? Yes, if you're paying yourself as an employee on your payroll, then you can be included on that, Alan. From everything that we've read, there's no reason you can't be included. You just have to include yourself in there as well. Are churches ineligible for this? You are a nonprofit. We've seen nothing that says that you are not eligible for this. But I think as we talk about the actual or the paycheck protection, as we do talk about the EIDL, there is a restriction that says religious and charitable organizations are excluded. So you can't get EIDL. But the Paycheck Protection Program, the PPP, we've seen no restrictions on churches as of this moment in time. FYI, in response to this pandemic, they are currently experiencing deferral of funds may avail yet within 3 days. That's the same thing that we've read too. But again, we haven't seen that funds are actually available in 3 days. We just haven't seen that happen yet. Is the hybrid a single loan or credit cards? Jonathan, those are individual business credit cards that give you cash out capability at 0%. That's why I call it a credit line hybrid. They're business credit cards that normally offer 0% rates for 18 months, but you could take the cash out at 0% on those cards. So that's why we call it a credit line hybrid. That's how that program works. Okay, everybody, I'm going to wrap this up. I have a 4 o'clock hard stop. I got to jump into a podcast to talk about these topics, but that gives you a really good overview. We don't know about the PPP yet. As more things roll out, I will teach you what I know as it comes out. We are in this phase right now on this PPP where we are just waiting for SBA to actually have these guidelines. Remember, I told you that, that's the next step here is we've got to wait. We are right now, the bill was sent to SBA. We're waiting for these guidelines to be determined. As soon as I get more information, I will pass that on to you. And Katrina says, what's the interest for credit hybrid after the 6 to 18 months? It's normal credit card rates, which are like 7 to 14%. They're normal credit card rates after that 0% expires. Okay, and I'm going to try to see where to get review of how to access the 10,000 you mentioned. If you go to disasterloan.sba.gov and you apply for the EIDL, you will see there's an application to apply for the $10,000 loans. And how's the cash taken out? There's checks, or the funding source gives you the ability to take cash out, or you can also write checks against those. That's how cash is taken out. Can we get a copy of these slides? Let me get them. I will attach them as part of this webinar, but they will be prettied up in your back office later this week as well. And those are no PG, just business cards in the hybrid. Those do have a personal guarantee because you're using personal credit to qualify for the hybrid program. But of course, you got to build business credit to get away from the guarantee. And where's your podcast? You can go to creditsuite.com/podcast, or it's a long one, but you can go to creditsuite.com/the-business-credit-and-financing-show. But just go to creditsuite.com, top right of the page, you'll find our link to iTunes. Going to wrap this up, everybody. I'm about to be on another podcast in 2 minutes. If you have any other questions, just reach out to your advisors, reach out to your finance team, reach out to Partner Success. We will help you with any other questions that you have. And when I have more information on the PPP program, I will let everybody know. Thanks, everybody, for tuning in. Hope you have a great day.